Man, ran off on the plug.
Not one time.
2 times.
Oh, come on, dog.
Ross, man, it's a 2-time, double dollar shine, Wall Street moving.
Pull up in the spotlight, bad, off-white. Pull up in the drop light, I done been the spotlight. Pull up in the drop light.
What's up, everybody? It's your boy Brandon Copeland, aka Professor Copeland. I'm here with my dog,
Ross Mac.
and we are tuned into another episode of Money, Music, Culture, where we are combining money and showing how it applies to the things that we're listening to every single day in the culture. So, first and foremost, how you doing today, brother?
Man, I'm good, man. You know, fresh off a flight, you know, feeling good, looking good. You did.
You ain't got that vid, do you?
You know what I'm saying? No. I'm vaccinated up, man. You know what I'm saying?
My dog got the vaccine. Was it the Pfizer? The Moderna?
I had to do the Pfizer. You know, the only way I had to do. You know, I'm almost there. I was 1 shot down, but I'm at that point where it's like I've been building up like 80% immunity or something. You know what I'm saying? So, you know, I'm out here feeling like Hulk Hogan now.
There you go. All right, man. Well, look, it's a pleasure to have you. I'm glad you got in here safe. We are talking money, man. So first and foremost, what's just on your mind, man? Like, before we jump into the music and all of that type of stuff, what's on your mind this week, man? I know you're an entrepreneur, you're a businessman.
Yeah, man. Been thinking about the markets, man. It's been an ugly March. You know what I'm saying? I don't know what's going on. You know, we had Janet Yellen and Jerome Powell speaking. They're also speaking today. They spoke yesterday. They talking about inflation. They talking about, you know, more COVID cases. So we trying to see what's going on. You know, I'm a long-term investor, but in the short term, I still want to see all green too, though. But it is what it is.
Amen.
What you thinking about, man?
Nah, man. I mean, when you talk about the markets, it's been rough. I think, you know, right now the markets are getting a little used to somebody coming and saving them, right? So like, if it's not a stimulus check on the way, if it's not lower inflation, then the markets are like, well, how are we going to survive, right?
Exactly.
And so at a certain point, we got to get to some sense of normalcy in our currency and our economic environment. You know what I'm saying? So, you know, it's obviously a good opportunity for the cryptocurrency space. It's good opportunities in real estate right now. It's a seller's market, huge seller's market right now. But, you know, as you said, I think that there's a lot of different information going on. And right now people are hanging on, hey, what else are you guys going to do for me? What else are you guys going to do for me? What else are you guys going to do for me? And at a certain point, I mean, it's like what we talk about on the show, right? At a certain point as individuals, we gotta cut off that umbilical cord, right?
Yeah, we definitely been feeding from the umbilical cord, accommodative policy, the Fed just pumping money for the last, you know, several years, damn near the last decade. So, you know, we've just been in a massive, call it, you know, bull run. And so, you know, the market is definitely a little shaky right now. Everything we talked about, and also interest rates going up, right? They're saying the 10-year getting to the highest it's been in over a year. So it's always a little interesting.
Yeah, no, I think, you know, another thing to think about is, like, it's funny when you talk about social justice, you talk about the culture. It's funny how some people, usually wealthy people, are some of the first, or even politicians, are some of the first people to say, we don't want to give any handouts. We're not doing this. We don't want to, you know, they complain about people of color. And, you know, at a certain point, you just got to do it on your own. I don't make any excuses and all that type of stuff. When this, you know, too big to fail, when you need a bank bailout, or when this pandemic, right, which we all hurting, so we all get it. But now it's like, well, what are you going to do for me next? What are you going to do for me next? Exactly. So listen, hypocrisy is at an all-time high.
Without a doubt.
And let's just make sure we stay COVID free and avoid hypocrisy, baby. You know what I'm saying? So
let's go. What you got for me today, dog? Man, what you been listening to, man? Oh, it's a classic.
shooter, I'm my own shooter. All this ice, I'm my own jewel. 6 lawyers and they all jewel.
That's that 4-4 right
I'm
there.
the star, this my move. Pinky ring, 250 on it. Guess it's safe to say, I spent your budget on it. Ran off on the floor twice. He steady calling, I ain't calling back.
Man, ran off on the plug.
Not one time.
2 times.
Oh, come on, dog.
Look, ran off on the plug twice, man. So the reason why we start this episode with that, man, when I think of this song, it's a catchy song.
Very.
I love the song. I play it before the games, not gonna lie to you, you know. But ultimately, I think how backwards are we thinking right now, right?
Extremely.
We're in a culture and a society where right now we are supporting running off on the plug as opposed to taking care of the plug, right? You need to take care of it. Never bite the hand that feeds you.
At all.
You know what I'm saying? Like, it's not cool to run off on the people who can help you build, grow, and expand your empire.
Who put you in that position you in.
Right. So, you know, again, that song, again, I love the song. Shout out to Plies. But I also think that people listening to the song need to really understand, don't do that.
Yeah, man.
Don't do that, right? Like, don't burn bridges. Don't burn bridges. We've all heard that before in our lives, but this is, you know, we could share some stories and stuff like that, but I want to, you know, let's kind of dive into what not burning bridges can potentially do for you, or why you shouldn't burn those bridges.
Yeah, no, I think it's very important. And, you know, just talking about kind of, you know, congrats to you on signing your new contract. And it's amazing because, you know, some of the people that were, you know, instrumental in effectively signing you or at one point in your life, you know, could have been viewed as, you know, just a young person, a small person on the totem pole, right? And now they're making decisions, right? And so that's just case in point. And the same with me, right? I know, you know, certain people that I've interacted with in my life that because I've always been a good guy, A1, that now that they're in positions of actually saying, oh, I can get you this type of deal. Oh, you a decision maker. You're not an intern no more. You're not. And so it's the same thing. But I also listen to that song and I listen to it and I'm thinking about credit. Right? Because at the end of the day, right, when Ply's talking about, he talking about the street life, right? I ran off on the plug, right? He talking about somebody that fronted you some drugs and he gave it to you on credit and you supposed to go take the drugs, sell it, and get that man his money back for the amount of work that he fronted you. And I look at that as really like our credit score, right? At the end of the day, anytime you get a credit card, the plug is Capital One, Visa, right? Or if you get a loan for a house, the plug is your bank, or the, you know, any financing company in this, whether it's the big drug dealer, the plug, or the bank, it's really instrumental on how you value your credit. Because if you ran off on a plug, you can't find it's only gonna be only a few more times you find a new plug, right? You can't just keep running. You ran off on them twice? Yeah. You know what I'm saying? And so in this same instance, it's like, man, I look at this as saying, not only don't you burn bridges, but what's your credit score like, right? Because at the end of the day, you steady calling, ain't calling back. That's a bill collector to me, dog. Right. You know what I'm saying? So it's like, how you looking at that? Because we can really start thinking about that type of person that's running off on the plug and that type of person who got a bad credit score, because they're going to be paying more in the end, right? That's the thing. In the short run, it's cool. Like, oh, yeah, I just, everybody joking about it. I ran off on the plug, too. Right. Okay. You got a 500 credit score? Oh, yeah, cool. We're going to give you 20% APR on this car. Instead of a 3 or 4%. You ran off on that plug. Okay, I'm a different plug, but it's cool because that follows you now. Right? So when you hear that song, like thinking about especially you being heavy in the real estate, congrats. You know what I mean? Matter of fact, let the people know what you just did, dog. Because I'm still a little bitter. He ain't called me in on the deal. I guess my money ain't green or something, but it's all good, man. Let the people know, dog.
Nah, man, we just closed on a 66 unit building. We building down in Newark, New Jersey.
You say how many units, dog?
It's a 66.
Oh, I ain't know how to count that far sometimes.
It's all
66?
good, man. All affordable housing, only 100% affordable housing building in downtown Newark, New Jersey.
Man,
right?
major.
Yeah,
Congrats.
man, I'm excited.
66 units, dog?
66, brother.
That's major.
66.
Seriously,
So,
congrats, man.
Yeah, man. We'll dive into all of that. But I mean, when you talk about the credit, man, we did a class in Life 101, and we had Sam Parker, my credit guy, come, and it's not my credit guy, his business is called My Credit Guy. He came and literally just dropped knowledge. I was sitting there taking notes, learning stuff, right? But one of the things he said, your credit score. So I asked him, first and foremost, what is your credit score, right? Like, where does this thing come from? And he said, basically, imagine you going to a car dealership, you going to a bank, hey, I want to take out this loan. And they're like, okay, we can give you the money. Are you good for it? You're like, yeah, I'm good for it. Well, your credit score is like 5 or 6 people behind you, just like, yeah, or no, he lying, right? Like, and that's one of the best analogies ever, right? Like, he said he gonna pay you back. He ain't gonna pay you back. Don't listen. He ran off on me, right? And so those are the things that, like, this credit score thing is such a different beast, because it is literally an algorithm that takes into account 5 different factors.
Yep.
And so you might be like, okay, well, I'm paying my bills on time, never had a late payment. Why is it not perfect? Well, that's because this other factor is affecting you negatively, which might be your utilization rate. Like, we want to see you using this credit card at some point during the month, right? So, he came and broke down a bunch of different things, which we can dive into. But I mean, you just hit the nail right on the head. This thing is about your credit. It's about your financial resume. Can I trust you to bring me back some money?
Yeah, no, that's real. I mean, we definitely want to get into what those 5 points are when it comes to actually making up your credit score. But I think not a lot of people understand what credit is until it's too late, right? I was talking on Clubhouse not too long ago, and we was talking about, why financial literacy is so important, because we think about all the stuff we learned in, education, right? In elementary school, high school, all the stuff, I'll say the vast majority of it, you don't really apply to your everyday life, right? Like, I never needed to know what an isosceles triangle is, right? Like, to this day, you know what I mean? Obtuse and acute and all that, and the cosine or some other. Like, at the end of the day, I wanted to know about credit, right? And it's crazy because at 18, you can go fight for the country. You can, but you can't buy no liquor, but you can get at least 20 different credit card offers, right? And that's when you're young and dumb, don't know nothing, right? And so when you're a young kid going to college and all you think is just free money, right? And that's the thing that we start thinking about the credit scores, because we never know what it is until it's too late, until one of your mama or daddy didn't put a bill in your name or something. And so when you're starting to think about credit, man, I think it's very important that you just had that class and starting to really try to preach about it, because everything in hip hop can be applied to real world stuff. Like, running off on a plug really is representative of what your credit score is. And in most, transactions, right, they're going to check your credit score, right? Any big purchase, they want to check your credit. Like, there's some jobs that require, oh yeah, let me run your credit. You know what I'm saying? That's wild, right? And so the world is changing. And so I think it's important. Don't be running off on the plug without knowing the full scope of what, the repercussions can be. Because Ply's talking about it like, man, this is going to be some street stuff. Like, you're going to have to come see me in the streets. But the reality is that that's going to carry to the next plug or to the next business transaction. So, what are some of the dopest things you learned from, your credit class with the credit guy?
Yeah, so there's 5 factors that make up your credit, right? And let's dive into those, right? The first thing, do you actually pay your bills on time?
Okay.
Right? So when we talk about credit, the first thing we got to understand is, like, what actually makes up this credit score? And there are 5 factors that actually go into this algorithm. Think of beautiful mind and all of these little numbers moving around, but these things actually go into your credit score and make it up. First and foremost, late payments. Do you actually pay your bills on time? It's payment history, late payment history is what they call it. Do you actually pay your bills on time? A late payment will not negatively affect your credit until 30 days after being late and being reported and all of that type of stuff to the credit.
So, like, really you get 60 days, right? Meaning, like, okay, I didn't know that. All right.
Yeah, well, really, it could be as low as 40 to 60 days, but it just depends on your payment cycle and when your lender actually sends their reports to the credit bureaus every single month. So that's another pro tip we'll get into. So now that we talked about the late payment history, do you actually pay your bills on time? The next thing is your utilization rate. Okay. So this thing gets a lot of people because if you have $1,000 in credit card limit, you can have that between a few different cards. You can have that on one credit card, however you make it up. But if you have $1,000 credit card limit in total, if you go above 50% of that limit, so if you spend $501, there's a red flag sent to the credit card companies right there, right? To the credit bureaus right there. So regardless of whether you have the limit or not, for some reason or another, they view that as a bad sign, a red flag. Oh, you need this money, huh? Right? Which is like, this, duh, like that's what I take it out for. It doesn't make sense at all. But so if you go over 50%, you never want to go over 50% if you can avoid it, because you're going to get that red flag, that red mark on your credit.
Is it like a sweet spot though to be in?
It's definitely a sweet spot. So most people talk about trying to stay below 30% or right around 30%. And then what Sam has told us, the perfect spot that'll actually improve your credit over time is staying between 5 and 10% utilization for the month. Right? So those are things that we want to keep in mind as we're spending on our credit. What's our limit? How are we utilizing this thing? And then also knowing, hey, if I pay this thing off, each lender has a certain day that they're actually reporting your balance to the credit bureaus. So if they are reporting your balance to the credit bureaus on the 5th of the month, yet you're paying, your due date is the 10th of the month, every single month they are reporting you as having a balance due because they're reporting it on the 5th. We want to make sure we're calling our lenders and not necessarily operating off of the due date. We want to operate off of the report date to the credit bureaus.
Yeah, so that's real. That's big, right? It's like, I just paid it all the way off, but you paid it a day or two late because they had already said, Experian, they did, so that's crazy. That's dope.
Yeah, so we want to know those. We want to understand those things, call our lenders, make sure we understand the credit report date versus our due date, because that doesn't really matter. The next thing we want to talk about is the length of payment history. So for a lot of us, what is weird is a lot of us know about if you close up a card, they say, oh, it negatively affected my credit. I close a card and my credit goes down. Why does that happen? Well, when you close a card, when you close a line of credit, when you pay off your house, you pay off your car, you lose that entire payment history. So you could be paying on a car for 6 years, making great payments, it's boosting your credit. Man, this guy, Ross, he's on it. Let him borrow some more money. And then as soon as you pay that thing off, it closes that account and it acts like it's never existed. So that thing that used to be a benefit to you just became what car?
I was just talking to my sister and I felt bad because she come to me for advice. And she was like, I've been doing everything you told me. I got the second job, and I just paid off this credit card and it's lit. But I looked and my credit score actually went down. So that's the reason.
Like the payment history. So
oh, wow. Weird. So they closed that whole thing out. So she don't got them years of payment history no more.
It's like
that's crazy. That's a scam, by the way.
Yeah. So this is what Sam shared with us. And some of these things, and this is what I share with my class as well, right? Like some of these things, now that we know about them, we can start to play chess and not checkers, right? So like with the utilization rate, for example, Sam was saying, some of us don't believe in debt, don't believe in paying interest. That's how I am. But we call this thing a credit tax. Your credit card company wants to see you have a little bit of balance every month so that they know that they can make money off of you. That actually boosts your credit over the long run. That's actually working in your favor, at least paying off the minimum. What he tries to say, again, get it down as much as you possibly can to that 5 to 10% utilization rate threshold. But you want to just make sure that you understand if you're going to play that game, you know the game, right? Because he called it the credit tax, the paying that interest. He's like, it sucks, but hey, that's what they want to see sometimes.
I'm never paying interest rate on a credit card. I always pay it off in full.
Me either.
But so are you thinking about doing that now?
Not at all. Not at all. Me personally, I'll just,
Them extra 10, 20 points, I'm straight on.
Exactly.
I'm never paying them.
One of the things he was talking about is like, trying to make it where it's like, it might be paying an extra 10% on $50 or something like that. But ultimately, again, for me, that's money in the trash. So different strokes for different folks, but at least I know the game.
Solid. No, that's real.
And also, if you are trying to improve your credit, then now you know something that could potentially help you inch up points here and there and there, right? Length of payment history we just went over.
Utilization.
Yeah, so also with length of payment history, we want to make sure that now, as we gear up for a big purchase, again, we're playing chess, not checkers. If you go ahead, you about to buy this house, you've been paying off this car for 5 years and 11 months. Might want to figure something else out, because as soon as you pay that car off and then the bank lender pulls your credit again right before you purchase this house, or right before they finally write off that loan, right? Or underwrite that loan for you, your credit, you just lost all that length of payment history. So let's avoid those bad life experiences. Let's know these things. Let's understand these things.
That's crazy. It's like, so when I'm thinking about getting ready to make a big purchase, in my head, it's like, I don't do no dumb shit beforehand, right? Don't go buy a car, then try to buy a house. Not only don't make a dumb purchase, don't pay off debt either. That's crazy, bro.
Again, I was sitting there taking notes in class, and I'm like, I've never heard of any of this stuff like this. And, it makes some sense when he explains it, but it's also like, well, I think one of the biggest things to understand as well is like the credit card companies want you to be in debt, right? That's how they make money.
It's America. Yeah, that's America. Yeah. That's the entire thing, yeah.
So now some of these algorithms are boosted when you not just take on stupid debt, but when you have more debt, have things on your books, because they want to know that they can make some money off of you, The next thing is having the proper mix of credit. And when I say proper mix of credit, that's having not just a bunch of credit cards, that's having installment loans, which an installment loan is one of those loans that has a set time period, set payments, so your car note, right? Your mortgage, I'm going to be paying this for 15, 30 years, et cetera. This month is going to be this principal, this interest, et cetera. That's an installment loan. So when they look at your credit, they want to know that, okay, can this person handle some big boy stuff as well, right? So what Sam said, and again, this is not for everybody, right? You got to know thyself to create wealth. That's what I always say, right? What Sam said in the perfect world was boosting your credit to having 1 to 2 installment loans and then 3 or 4 credit cards. Some people can't handle that, right? Me personally, I'd rather just keep my 2. I got my business lines and all that type of stuff. Personally, I have 1 credit card. That's the big boy card. That's the nice limit. We good. We can go buy whatever we need to buy. If we buy more than that,
American Express.
Amen. Right? And if we buy more than that, then I got to question myself, like, what happened today? You know what I'm saying? I have another card that literally has been my card that I had since college. So my mom was very ahead of her time. She said, hey, we're going to get you a visa now, a student visa. We're going to put a $200 limit on it. So boy, if you mess this up, don't get to that $200. But if you do,
was it secured?
No.
Okay.
Actually, I don't know. To be quite honest with you,
because it sounds like a secured, like the $200. But no, that's dope that your mom's was on the game though.
Yeah. So she put me $200, which I think I would suggest to everybody, right? Because now, if you're a young dumb kid and you just go start swiping Chipotle on me, y'all, whatever it may be on me. You $200, right? Yeah, I know 200 might hurt some people, but it's not going to ruin your life. You know what I'm saying? So it gives you enough to start building your credit and having that monthly bill that you can pay down, but not enough rope to hurt you and kill you. You know what I'm saying? Right. So, and I still have that credit card to this day. I was going to close it down, but what I do is I use that credit card and I use it on them sites that I'm like, I don't really know, like this
site, whatever, right? I don't
Just in case you get compromised.
Yeah, like you
can't take more than 200.
So again, that's how I avoided closing that down and losing that length of payment history, which has been with me since my freshman year of college, you know? And then so the final piece is inquiries or new credit.
Okay.
Basically, you go to, you know, people talk about, well, I don't want to go to the car dealership because when they pull my credit, they're going to drop it, right? That's an inquiry right there, right? New credit. You go into a shopping center, and they like, oh, you want to open up this Macy's credit card? You want to open up this Best Buy credit card? Yeah. Right? Yeah. And again, these things are affecting your credit score differently. They make up a different percentage of your credit score, but ultimately, again, knowledge is power. Understanding these things, that's where we can put these things to work for us. Mm-hmm. So now, you know, we know what our children will have in college, in high school, if we want them to, right? We know okay, I got this big purchase coming up. What do I need to do to go ahead and boost my credit score up a little bit more before the purchase? Because as you said, in the long run, that quarter of a percentage on interest, that one whole interest rate, that one whole percentage point in interest, right? Like that's thousands
of dollars. And people don't understand that. So I appreciate you going over the 5 because credit score is something that not many people understand at all. We know it's like this thing we got, but we don't really know where it come from, why we need it. But the reality is, if you don't take nothing else from this episode, 1 percentage points can be the difference of thousands of dollars. And what I mean by that, having a 750 credit score versus having a 550 credit score, you go to a car dealership, you're going to be ended up paying multiples of thousands of dollars for the same exact car, more than the person with the higher credit score. And that's what you want to think about.
And we talk, when you talk real estate, so a couple years ago, to get pre-approved for a house, a mortgage, you used to just need to have a 580 credit score and above. Now, because the market is so strong right now, 620 plus. And the biggest thing that we want to highlight is like, the higher your credit score is, if you have one slip up, you're going to get hurt a lot more. So you can have a 740 credit score. I've been doing everything right, and then my auto pay just stops working 1 month, or I just don't pay one bill 1 month, and after that, 660. Whoa, hold on. Damn. What?
I've been
I just paid it the
my
next
whole
day.
life. Yeah.
But the higher your credit score is, the more a negative ding on it can affect and drop your rate, or drop your credit score. When you have a lower credit score, a negative effect is kind of like, we expected it from you, right? We should have known better. Take off 10 points. You know what I'm saying?
Shame on you. No, shame on me.
Right. So
yeah, no, that's real.
Yeah, so it's important to know that too as you go into, okay, hey, we gearing up, we about to buy this crib, about to close. That's not the time to have that ding. You know what I'm saying? That's the time to be sharp with everything, because again, as you said, that's the difference in thousands. And some people look at it like, man, it's 30 years. I'm not worried about this money. And as I pointed out in class, literally on a $300,000 loan, 4.5% interest, if you make an extra mortgage payment of $100 every single month for the life of the loan, you can shave 7 years off of the life of the loan, and you can save over $34,000 in interest payments. Real math. That's you can look it up right now. $34,000 just by paying an extra $100 a month. And I know everybody's situation is different, but there's some people who don't understand this thing and understand how interest is, compounding interest. You don't want to pay it. You don't want to have to pay it, right? And I just want people to know and understand these things, because as I tell my class, I don't know about y'all, but that's my $34,000.
Exactly, and you paying it to somebody else. Because the game of real estate is so interesting. For that same $300,000 crib, you look up after 30 years, the amount that you've paid, you paying principal and interest. You're almost always paying more interest than the actual value of the home, right? You look up and you be paying in 30 years probably a total of over $700K for a crib that's $300, and that's the thing. The name of the game is obviously to pay the least amount. But coming back full circle, the more you're gonna have to pay is gonna be based on your credit score, right? That 750 credit score versus 650 credit score might be the difference between your interest rate of maybe 3.5% versus 4.5%, right? And that's the true name of the game. So when we're thinking about, running off on the plug, right? So, okay, I made a mistake. I was young and dumb. I ran off on the plug, right? AKA, I ain't, I'm like, man, I ain't never paying this Macy's card back. You know what I'm saying? And you don't even know it, but that's been hurting your credit this entire time. So what are some ways, did he share any ways in terms of trying to help boost your credit score?
So one of the ways that you can actually boost or understand your credit better, at least, right, is first and foremost, knowing what your credit score is and knowing what the credit bureaus view as your credit history, right? So you can go to freeannualcreditreport.com. I believe that's the name of the site. If it's not, go look up whatever the site. Right. But it used to be something that you could only do once a year. Now, because of the pandemic, you can do it as many times as you need to, right? And the same way a lot of people have more time on their hands, is the same way your neighborhood hacker has more time on their hands, and they're working on my stuff, your stuff, all of our stuff right now, right? So checking that out, getting your credit score across the 3 different bureaus, and then you got TransUnion, Experian, and Equifax, and then seeing if there's anything on there that, hold on, I don't have a bank account here, right?
Chances are it might be something wrong.
Yeah. Look, wifey and I, we went to open a bank account for our real estate business years ago. We want to plug them. Well, no, we went to Chase Bank. We went there and, they're like, hey, Taylor, it's nice, man. Oh, you had an account here years ago already. I'm Wells Fargo, TD. I've never been to Chase.
Wow.
What you talking about? Yeah, you opened an account. Tell her childhood address. You opened an account here years ago. I mean, you haven't done anything on it or anything like that, but something was negatively affecting her credit.
Wow.
An account that was open when she was a kid, right?
That's crazy.
And so again, this affects everybody, right? Yeah. So we need to know these things, understand these things, and then figure out, okay, how do I get rid of that ASAP, right? So one, understanding those things. Then there are a number of different ways to boost your credit, right? There's things like authorized users, where now, hey, Ross, can you make me an authorized user on your card? Don't even give me the card, but now your credit score boosts my credit score because now we have really not the same credit score, but I get your credit resume to trickle down on me by being an authorized user on your card. The thing I'll say with a lot of those things too, it's great if you're the person that is benefiting from these things. The other folks who are giving out that authorized usership and all that stuff, co-signing for people, like, be careful, right? There's a reason you got to co-sign, you know what I'm saying? And ultimately you're responsible for that bill. Yeah. So don't allow it to drag your stuff down.
Yeah, no, earlier you said, like, as long as you know the game, you know how to play chess. And so the idea of using the authorized user is dope if, one, you got good credit and you're trying to help somebody else. But two, like you say, like, I did this with several people in my family, right? And the way you should do it, right, is, and not assuming it's like our kids, but like some relative is like, man, Brandon, I know you got good credit, bro. Put me on your card as an authorized user. And the moment, because what ended up happening, they say, okay, cool, I'm gonna put Ross on Brandon's card. They're gonna mail Brandon to his home address a card with my name on it, right? The moment that happens, all Brandon needs to do is rip up that card. And I never need to touch that card. But after like maybe 30 or 60 days, what ended up happening is that I'm gonna benefit from everything he's doing, right? So if he got a 750 credit score with a actual, credit limit of $50,000, I got a $50,000 credit limit, right? So that's gonna help offset some of the, me running off on a couple of the plugs, the Macy card, the Southwest card you was going through the airport just to like, oh yeah, I'll open up let me try to get 10,000 points. I'll open this up. Meanwhile, that's a new inquiry and a hit. But the idea that authorized user is dope, and I think it's a cheat code that not a lot of people know about. And, if you got a person in your family who, got good credit and, because it can hurt both ways though, right? Like I can be added on there and Brandon end up running off on the plug and now that's impacting my credit. So you definitely want to make sure Brandon ain't never, gonna always keep his good credit. But for the people, that's weary, because I was weary at first. What you mean put you on as an authorized user? You know what I'm saying? What you talking about, Willis? But when he told me, like, man, just rip up the card, bro. You ain't never, it's just going to help boost my stuff. I'm like, it won't impact me. They're like, nah, it's just, your profile is now on me. And so I think that's super beneficial.
Yeah, very beneficial. And again, I think the biggest thing you said, doing it with somebody you trust, right? Yeah. You know where they live. You know how you can get your bread, right? Like, I'm just keeping real with you. Yeah, exactly, right? Like, because again, there's a reason why they need you to be an authorized user, right? And again, we all go through our own struggles. We all have our life stories, so it's no issues at all. But again, you just want to make sure you protect yourself because the things you're trying to do for you and your family are dependent on your credit score, most likely. So with that being said, man, I think we just gave a credit masterclass.
And I do want to touch on one other good thing too. Just, I think it's a great way to help either establish credit or also improve credit is by having a secured credit card. And the reason that's dope is because you're effectively prepaying, right? So on something like that, you might have a $200 limit, but you've already paid $200. So therefore it's fully securitized. And anytime you swipe it, the idea is that you pay that money back, but if you don't, it's already securitized. So the reality is it's going to start helping you build up that credit history, right? Okay, you keep paying this $200 back, or keep paying this maybe $60 back, or whatever it is you should try to do to stay under the credit utilization. But the idea, not a lot of people know about it, is the fact that it's really good for people who have no credit, right? Because it's now starting to help you establish credit. And the good thing long run is like, okay, now you can go. Because I know I didn't have any credit card. My mom told me don't do, and that's what really ended up happening, right? If any relative, your parents ever had bad credit or something, they don't want that to happen for you. So they like, you know what? You ain't never even gonna get a credit card because I don't want you to ever have bad credit. And the reality is, it was great that I never had credit, but it can hurt you by not having credit. Because I remember, when I first got out of school, got a real good job, and I had no credit. So I had to pay cash for everything. My whole signing bonus over with. You know what I'm saying? They like, oh yeah, I'm going in I think like, I ain't gonna even plug them, but this furniture store in New York, I'm like, oh yeah, let me get this little I'm feeling good. Let me get this little $2,000-$3,000 bed. You know what I'm saying? Whole little thing. Like, okay, I'm like, yeah, let me finance it too. I'm good for it. They like, I'm showing them my offer letter. Hey, this is how much I'm finna make. Like, you know what I'm saying? They like, yeah, you ain't got no credit, shorty. It's over with. And so the reality is you definitely want to have some established credit before you get out here in the real world too. But good credit.
So now people, hopefully by watching this episode, they understand their credit score a bit better. They understand what's going into it and how they can protect it, boost it, and grow it so that they can make the purchases that they plan to make in life, right? Like you're going to want to buy a house one day. You're going to want to buy a car one day. If you don't plan on just buying in straight cash, which if you can, good for you. But if you don't plan on buying in straight cash, your credit score is going to matter. So same way Black wealth matters, same way you matter. Look, hold up. Yeah, same way you matter, your credit score matters. So with that being said, man, you've tapped into another episode of Money Music Culture. We appreciate you being here today. It's your boy, Brandon Copeland, a.k.a. Professor Cope.
And it's your boy, Ross Mac. And so what we gonna need you to do, make sure you like, subscribe, write a comment, and then send this to one of your friends, man. Your neighbor, your auntie, your little cousin, the little snotty nose one too, that's cool. Send it to them, but make sure you tune in every week, man. Money, music, and cultures. You already know, let's get it.